So we are live.
Thanks, Trisha. I think we need to promote John Sawyer.
He's on his way.
Excellent. That was John giving me a quick call.
John, you may still be on mute.
It's not showing mute, but we can't hear you.
Sometimes it works.
There we go.
And sometimes, yeah, I had to took the earbuds out, so we're good to go.
This is what happens when you change things up, John.
I know, earbuds.
You're not in the office. All right, let's go ahead and call the roll and get started.
Chair Rogers,
I'm here.
Member Schwedhelm,
Here.
Member Sawyer.
Here.
Let the order reflect that all subcommittee members are present.
All right, and thank you to everybody who's participating today. We are doing this via Zoom, which means you'll have options to participate by hitting the raise hand feature during our items. Without getting too far into it, I'll go ahead and start with public comment for today. This is public comment for non-agenda items. If there's something you'd like to bring up that's within the committee's jurisdiction, but is not on today's agenda, go ahead and hit the raise hand feature on your Zoom. Madam Recording Secretary, I don't see any hands. Did we have any pre-recorded voicemails or emails?
We received no public comment via email.
All right. We have a couple of minutes, or excuse me, we have special meeting minutes from June 24th. Council members, did either of you have any amendments to those minutes? Okay, we'll see if there's any public comment on the minutes to see if there's any changes before adoption. Excuse me, I think I said the wrong date. It's October 12th. So I just want to make sure I'm really clear with folks.
Yes, October 12th.
Yep, seeing no no amendments to those minutes, we'll go ahead and bring it back. Let's show those adopted as presented unless there's objection from council members. Seeing none, we'll go on to item 4.1. So our briefing for our fiscal year quarterly budget review. Now, Alan, this is your item.
This is my item. Thank you, Mayor, members of the subcommittee. Hold on, I'll wait for the slides. We can just move over to the next slide, please. So this is our first quarterly budget review. We had last year, part of our commitment to the council and to the subcommittee, it was to provide more routine and reporting out to the committee of our budget performance, beginning with this first quarter review. We have started working on new procedures. Actually, last fiscal year, we engaged a firm to help us review our fiscal policies and our methods for forecasting. The goal is to come up with a workable model that can be used in-house as opposed to sending data out to a consultant. And part of the modeling and the measuring of our budget performance is to focus on recurring operating revenues and expenditures and providing a simplified look on what we can afford on an ongoing basis. So in addition, what we're trying to do with this is to increase transparency in the decision-making, especially at the policy level, and to maintain and increase executive management's discretion over the most effective use of limited resources. So basically providing more of management reporting as opposed to the type of reporting that we've done in the past, and to be consistent and timely in that reporting. So that's why we've set this up on a quarterly basis to be able to move forward, and to facilitate greater accuracy when developing future budgets. So really looking at trend analysis and other factors that go into developing our budgets going forward. And I should mention that this review, we can go on to the next page. This update is largely centered on the general fund. In future ones, we can adjust the presentation to include more funds or specific areas we want to look at. I should point out that this is our first report. We do expect this to be evolving over time. There's going to be some information that you may want more than others. And so what we're hoping for is to get that type of direction as we go forward, and to be able to have the most useful information for you and the council. The adopted 2021-22 budget is used to forecast monthly revenues and expenditures. So we establish our budget, and then we look at that on a quarterly basis. In theory, we would look at it on a month by month or quarter by quarter. Right now, we kind of have things in just divided equally in quarters going out as we develop good trend lines for what we would expect to see on a year-over-year basis, either by a given month or a given quarter. So with that in mind, each month actual revenues and expenditures are compared to those projections. So again, taking a look back, making a look forward, and keeping us online as we go along. Variances to the projections are calculated and evaluated as to what caused those variances. Those can include any unforeseen events or challenges in council priorities, or updates, just general updates in our projections. And again, as we move forward and we get used to doing the model and what data we need to pull to get in there and how our trends are going, we expect that the forecast and then the reporting out and budgeting going forward will start to get more accurate. And I think one other thing that we're really looking with this is to be able to be a little bit more proactive in how we are by doing this analysis and reporting out on a quarterly basis to you. That helps keep us on top of where we are, where we need to make adjustments. If at a mid-year period we need to make adjustments to either our revenues or our expenditures, we can go ahead and do that. And that just kind of keeps us more informed as we go along through the process. Next slide, please.
Alan, can I interrupt? I'm sorry, Mayor. A quick question of clarification.
Yeah.
Thank you. Alan, you mentioned early in your presentation about you used the words "what we can afford." Are you speaking to what we can with these potentially monthly or quarterly reviews of our budget? Are you talking about what that we have a set budget and then we look at whether or not we can truly afford what we've already determined, as being part of our budget, or what part is what we can afford?
So we try to, where I'm going with that is the overall concept of budget affordability, and it gets into whether we have a deficit situation on an ongoing basis. So if you have a certain amount of revenues, say in this case, $177.9 million in revenues, you would, to be affordable, you would want to have expenditures on an ongoing expenditures in that same area, preferably below that, right? So that's what we're talking about, is how we can go and set up a budget each year that is based on the premise that we can afford what we're spending, and have that in place going on the long term.
Okay, thank you. I appreciate that, because this is sounding like a very responsible path, and I just want to make sure I was clear on what you were suggesting. Thank you.
You're welcome. So as I mentioned, this is the revenue budget for the current year, and this is actually showing what our recurring operating revenues are for this year at 177.9. So the other thing that we're trying to do, and kind of the lessons that we've learned over the past year or so, is really focusing in on those things that are recurring as opposed to the one-time elements that are there. So the majority of our operating revenue is recurring revenue. We are able to filter out those that are dealing with grants, and that those are very specific revenue amounts, and they're tied to a very specific thing. And so what we're really trying to do is show you and the full council what our what pot of general fund dollars that we expect to see on an ongoing basis, and then that allows you to align your expenditures to that. So with this, the majority of our revenues come in from sales tax and property tax. We have it broken down there, and as in a future slide, you'll see breaking down the actual categories of general fund operating revenue. So next slide, please. And this shows us where our expenditure budgeted for this. Now, this is our recurring expenditures and our transfers. What you'll notice is that right away that it's more than what our revenues and transfers in are. However, what I would say is that for this budget, we do budget for full employment. So if there are positions that are within the city, we budget those fully. However, there is generally always some sort of vacancy amount that's there. And in this particular budget, so what you're seeing there is 75% of it going to salaries and benefits, but there is some offset that would come from any vacancies there. We typically call that turn back. We would obviously love to have no turn back in that area. That means we're fully employed and being able to provide all the services in the city that we should. It's just not really a reality. So some of this we expect to come back at the end of the year. Moving on to the next slide, please. We'll get into the revenues, and the majority of the information here are revenues. I did look at the expenditures, or where we are at the first quarter, and we are spending right now just right at about the the quarter mark. So we're kind of on pace there. We are the sales tax or the revenues that we have here for the first quarter. You're really not going to see much, but there are some things that I do want to point out, and I'll explain all of the categories when we get into the mid-year look at this. I think we'll have a little bit more information to kind of parse out and show you some trends that are going. So again, it's the evolution of this report. So our property tax, we won't see our first installment of property tax until the second quarter. The sales tax includes our Bradley Burns, which is our regular sales tax that we get in, plus Measure Q, which is the where we took our 2/4 cent taxes and basically combined them into 1/2 cent sales tax measure, and our Prop 172, which is a not a special tax. This is tax that comes in, but it is a public safety based tax, but it is a general tax. So you know that for our budgeted revenues or budgeted sales tax for this year over last year, we've increased year over year budget estimate by $8.2 million, which is about 15% year over year. As we analyze our year-end numbers and kind of where we are with revenue, this would be one of the things that we really try to key in on as a potential for changing at mid-year if possible, because what we want to do is make sure that we have as accurate as possible revenue estimates to base future projections on. But we started noticing in the last year that that revenues that we thought were going to be adversely affected by the pandemic were actually coming in better than thought. And so when we developed the budget for this fiscal year, we did bump up our sales tax to reflect that. Our franchise fees, utility users tax, those are our various, I think what we have, cable and PG&E, and those utility users tax are there. That's its own category. The other taxes, just to break that out, that includes vehicle license fees, and we receive that around the same time that we receive that when we receive our property tax. So we'll get that in the next quarter. Our franchise fees is a mix of they're paid to us on different times during the year, so they come in on different schedules. Our PG&E franchise fee is an annual fee that we get in, and we get it in April. So we won't be reporting out on that until the end of the year in that final quarter. Our quarterly cable comes in quarterly, and then garbage comes in monthly. So right now, the bulk of the revenue that we're getting in that's franchise related is really on the garbage side. Cannabis right now is about 22% of our budget estimate, so they're tracking online. Business tax, the main remittance period for business tax is in the January to March timeframe, so we're not showing hardly any revenue now. It would just be new businesses coming in and establishing and paying that tax, but the annual remittance won't come in until the third quarter. And we'll probably report out on that or have reportable information on that in the fourth quarter. Real property transfer tax. This is something that's is doing very well right now. For the quarter ending period, we were at 36% of our revenue estimate. However, I ran it as of the end of October, and we're at about 50% of budget. So that is a combination of the value of the or the price of the transaction, the real estate transaction, and a function of how many that there are. So what it's telling you is that there are a lot of real estate transactions going on right now. So that is something that we would look to try to adjust at mid-year as we get a little bit more data, compare it to last year and previous years, and see what makes sense to be able to fit in a good revenue number for that as an adjustment at mid-year. In TOT, right now is at 11% of budget, which is low, but it is higher than last year. So that's a sign of things in our tourism and TOT area that's potentially starting to turn around. So that's something that we'll keep a look at closely. Licenses and permits, those are basically our building permit fees and encroachment permits and transportation permits. The revenue that's showing on there is pretty high. That's largely due to seasonal construction activity, and it is consistent with last year. So again, it's something that as the rains start and that activity goes down, we'll kind of look at those trends. We'll match them up to prior years to make sure that we're on track, and we'll keep that communication going with the building department to make sure that there's nothing in the pipeline that may affect future quarter revenues coming in. So we're always having that to be as on track as possible with that. Charges for services are that's building and other miscellaneous fees, but it also includes our recreation fees. And this is another piece of good news as we come out of the pandemic and are able to start programming our revenue or our recreation programs. The year-over-year increase in of recreation fees is about $674,000, or about a whopping 256% increase. Basically, what that's saying is that we didn't program anything the year before, or we didn't have the revenue coming in from it, and now we're starting to see that. So with that is going to help shore up that part of the revenue on the year going forward. The intergovernmental revenue, this is just the recurring part of it, which includes state post reimbursement, county revenue. The main thing that you're seeing here is the Roseland payment, which is posted this year. And then there's also a minor amount of crime impact mitigation fee that's coming relative to the casino down in the Creighton Casino. And then fines and forfeitures are your parking violations and impound fees, things like that.
So Alan, I see that the city manager has his hand up. Let's go ahead and check in with him really fast.
Sure.
Thank you, Mayor. Alan, I know this is a first time effort at the quarterly briefing. And as I'm looking at this, I'm wondering how difficult it would be to provide prior year quarterly comparisons.
We can absolutely do that. That's absolutely.
I think that might be helpful to just give another data comparison point. It's kind of hard to tell with many of these whether, you know, just using sales tax, whether 8.6% of our annual budget at this point in time is, you know, good, great, or not so hot, you know, unless you have a comparison of the prior year.
Right. And
I think the city manager read my mind. I just assumed we would be building that as we went through it. Wasn't sure how much effort it would be to go back and put together a spreadsheet that shows that historic data, but I assumed we'd be building it.
we have that. It's not in this slide. It's just or in this slide deck. It's an oversight on our part. We'll clean that up for the mid-year one. So moving on. That is a lot of or next slide, please. So that's the basic information that we have, and I have the notes on where we want to go moving forward with those parts of that. And again, we'll continue to tweak in the direction that we think that might, again, provide that beneficial information and trend data as we go along. I'm sure that we will have some charts that will also help illustrate where we are and where compared to where we have been. And as I mentioned before, part of looking at not only our forecasting and how to provide this information, but we're also looking at what we can do with our budgeting policy and procedures, including fund policies and the like. So what we're doing currently is looking at our existing internal budget policy and where we can improve upon that. And again, the consultant that came in beginning last year and looked at a number of different things, not only how we are reporting on the data and where we could help with that, or where they could help with that, but also where we are in terms of our fiscal policies and again, developing some kind of guiding principles and moving us forward in how we develop our budgets. Again, focusing on the general fund, but really this is applicable to all funds. And so we're currently, they wrote a report, we're going through that, trying to find out what things we already have in place and what we can improve upon and add to our existing policies. And we'll be bringing that back to the committee in a couple weeks. Right now, we're looking at, trying to create a sustainable operating budget, focusing again, like I said, on recurring operating revenues and expenditures, looking at plans to mitigate financial risk that's out in the future, providing transparency and accountability to our financial management. And we are also looking and thinking that all of these things together are ways that we can preserve our credit ratings. So in addition to general budget development policies, we're also looking at the general fund reserve policy, updating that, and bringing back what we were looking at prior to the 2017 fires, which was kind of a risk-based reserve model that would allow us to create a mechanism that when we have a surplus or we do better in a particular year, to be able to move money into either a revenue volatility risk-based reserve or a pension stabilization reserve or any of those types of things dealing with maybe deferred maintenance or capital expenditures. And what we would want to do is develop policies around those to where it's very clear and transparent exactly what the formulas are based to move those. This is a lot of work that the committee has worked on, like I said, before the fires. When the fires and we lost the majority of our reserves, we kind of shelved it. And so we're bringing this back up, especially as we have, as the council has allowed us to place this amount of PG&E dollars into our general fund reserves, it kind of allows us the opportunity to be strategic in mitigating risks going out in the future. So these are things that we are developing right now to bring back at least the frameworks of these, if not the full drafts for review. And next slide. I kind of alluded to this, but yes, we are looking on the 18th to bring back and discuss our fiscal year end 2021 results, and then also these general fund strategies and draft policies for discussion. Then at the end of January will be our next quarterly update. And so that will look at the middle of the year, and not only will we be able to look at where we are at that year in comparison to the prior year and years prior, if need be. It'll allow us to have that discussion on bringing an item to the full council to either adjust for additional revenue. We'll definitely want to adjust for additional expenditures with the passing of our MOUs and the costs associated with those COLA adjustments and other parts. And that's where we are right now. That's the end of this presentation, and I'm available for any questions should you have them.
Thanks, Alan. Tom?
Thanks for the presentation, Alan. Yeah, a couple of questions, just refining it. On slide 4, do we also have the actual percentages and or dollar amounts of each of the pieces of the pie? Because we have the 53% were sales and property tax, but I don't know those other percentages and or dollar amounts, because I think strategically it'd be helpful information if we're going to go UUT or other revenue generating sources, understanding which areas give us the greatest capacity to increase revenue.
Yep, I can add those.
Okay, and then on slide 5, the pie showed 4 chunks, but there was 5 categories listed. Does that mean there was nothing? And I think based on colors, there were no indirect cost expenditures. The colors are kind of close.
Yeah, it's extremely small. So
Okay.
it's a wafer thin sliver.
Okay, sorry, I missed that. And then the last one on slide 6, you talked about the real property transfer tax.
Yep.
And I know council had given direction, months, if not years ago, how we're eventually, most of those dollars are going towards homeless services. How does that policy direction intersect the discussions that have been happening using some American Recovery Plan Act dollars for homeless services? What would happen with the real property transfer tax dollars?
Well, you would, the way that we currently do it is that we move the cash on those when they come in as we budget it. Actually, not as it comes in, but we budget anticipating the cash to come in and move that over to homeless services at the beginning of the year, and then true it up at the end of the year or after fiscal year end. So I think what would happen with this is that we would, if the council always has the ability to suspend that policy if need be, if the money's going in. I guess if I'm understanding your question, right now those funds would go in. They're just part of that transfer. So if we're replacing it with ARPA funds, you could suspend the policy, keep the funds in the general fund, and still have the exact same amount of ARPA funds going in to take care of it. It would just swap out.
Yeah, I get that. I'd be interested in hearing what the mayor, Mr. Sawyer's opinion is on that, because I know we had plenty community discussion about the history of the real property transfer tax, and that the intent of those dollars was to go towards, housing or homelessness. And so I think council should make a conscious decision with some of the things you're suggesting. But again, those are some lengthy discussions. And again, Chris or John, I'd be interested in hear what your thoughts are on that. And those are the only questions I have.
I'll jump in on that one issue. I think we have been very clear about our intention with those dollars. It would not hurt to have that conversation again with the council to reinforce the decision that was made quite some time ago. But I think that we had made it pretty clear. Now, whether or not that creates a fiscal issue with those funds is potentially worthy of a discussion. But I think we had a pretty clear plan laid out for how those funds were going to be used according to history. So I agree with your thought there. One of the things I was going to ask as far as the presentation coming to council, Alan, you went into I only have one screen in front of me, so I can't go back. I think it was slide 6. Is that where you had the detail on the percentages?
Yes.
You went into a fair amount of detail on some subcategories. Are those subcategories going to be articulated in the presentation to council?
Yeah, typically what we do when we present to council is we roll up our revenues into general categories. So we can, what I was doing was just kind of expanding on what those general categories, what's inside of them. We can show as much or as little as you'd like. It gets to a very, it becomes very long. We have a number of revenue codes and line items that we put into, but if this is too summarized, I can break it out into those individual areas quite easily.
Well, I wouldn't be looking for any more detail than what you provided to us. But
I figured that it would be best for me to go in and to just kind of verbally go through what all of those are, but I'm happy to do whatever.
Yeah, because I'm not looking to get granular about it, but I think that we probably could, especially with new council members. I think it would be helpful to the conversation to have a little more granular. And basically what you articulated to us, I think would work well. And in a couple of the subcategories help to identify where those funds were coming from. And when we're talking about year over year, as Mr. Colin requested, I think having those comparisons might be helpful. And I will leave it to you to decide how granular you want to get and how that would be the most beneficial to council in their understanding of this particular presentation.
Yeah, I think, thanks, John. I appreciate that. And I think breaking down other taxes to at least in some a slightly more granular level that covers some of those things, because by leaving it just the way it is, you wash out the increases that are happening in RPTT and those other ones that are noteworthy.
Yeah, and there's some pretty good, some large numbers in there. So I think that's why I think it'd be important to break it down a bit. I appreciate that. Thank you very much.
I think I'm being kicked under the table again. Jeff, did you have a question?
I just wanted to revisit the real property transfer tax question before we moved on. I think you all recognize that we've proposed funding some of our homeless services and the 24-hour overnight safe parking program with ARPA funds. The intent of that was not to change the council's direction on identifying a stable and continuing resource of money to support homeless services. What we are proposing is a short-term exchange of funds, not changing the amounts that we're allocating to the program or the service. But instead of using real property transfer tax, we would use ARPA funds. And if real property grew beyond that amount, then those additional resources would continue to be available for homeless services. And I'm not sure that was clear in the recommendations that we made. But I wanted to add that clarification. We're not trying to change the policy that was directing allocation of real property transfer tax revenues to homeless services. We just have this additional funding resource available. And if we can exchange it, that would provide additional flexible general fund monies to address additional priorities.
Thanks,
Mr.
Jeff.
Mayor, could I comment? I think that was a yes. I agree with that, Jeff. Just with the robust community discussions we had about that funding, I think some would argue put more of it towards housing. You know, and there's a variety of different ways, whatever that dollar amount is, you're right. Let's use the ARPA funds for homeless services, but the other part of the equation, I'm sure that type of dollars, some members of the community say, let's put it more towards housing, whatever that might look like.
Yeah, and that dialogue, I think, would be appropriate. Is okay, we now have unanticipated general fund revenues and resources. What's appropriate? What's the appropriate use and expenditure for those? Is it housing? Is it some other priority that we have? And we would want to come back to the city council for that kind of direction.
All right, and I'm interested in having that conversation. Tom, you asked about what the expectation from council was with the RPT funds. We actually had a pretty clear kind of breakdown of year over year what the increase was expected to be, and I know that there are still folks in the community who ask me every single budget cycle for the proof that we are spending it the way that we had expected to spend it. I don't have any other questions for you, Alan. I just really appreciate this approach to it. And I think it gives this committee the ability to really get a better understanding as we move through the year, how and when our revenue comes in and what our expenditures are. And I know that there's a couple folks who track the turn back pretty closely and think it's a silver bullet. And it's nice to know sort of how we're trending in those on those conversations. With that, I'll see if there's any public comment. If you are interested in public comment, go ahead, raise your hand. I don't see any. And Madam Host, did we have any voicemails or emails?
No emails were received.
Excellent. Thank you so much, Alan. We'll go on to our next item.
Okay, I will wait for the slides. All right. So this item is just a update and discussion. This has come up along with our talks about the pension obligation bonds. And this is actually something, again, another thing that the committee has looked at a few years ago. So next slide, please. So what we're looking at, and kind of to provide some of the background of a Section 115 trust, which is an IRS approved irrevocable trust used to pay pension or other post-employment benefit costs. The funds accumulated in the trust may only be used to send to CalPERS. The city considered establishing this type of trust. We had some money that accumulated from the 2003 pension obligation bonds that were there. And so the idea back at the time, under a few CFOs ago, was to use that in order to fund, kind of provide seed money for the trust. A subsequent CFO came in and thought that it would be best to just do an additional discretionary payment, or ADP, of that amount to PERS. So, and that's what we did at that time. Next slide. So the basics of Section 115 trust. So it operates basically as an investment account. The city can access the funds at any time to send money to CalPERS. It presents more investing options than the city's general investment portfolio. The city has control over the investing strategy, and the returns contribute to the growth of the fund. Although there's also, it could go the other way as well, just full disclosure. Many cities use the trust to be a little bit more conservative than CalPERS, but more aggressive than their general investment portfolio. So in other words, if CalPERS's rate of return is targeted at 6.8%, but the city's investment portfolio returns about 0.5%, you could target the growth at like 4% as an alternative. So it allows you to be a little bit more aggressive, to use different strategy, and use that to grow those funds at a higher rate than you would be through just a regular general investment portfolio. Next slide, please. So how does this kind of fit in with our pension strategy? As you know, we are looking at ways to address our pension costs. You know, you've seen a couple of presentations from Jan on the on issuing POBs to address the a significant part of our UAL. We would, this could be a companion strategy to go along with this. Developing, we would need to, it would be imperative that we develop a formal council policy for how we would fund the trust. Just as I mentioned in the prior presentation about risk-based reserves, if we came up with a pension stabilization, you know, fund, this would be it. Or could be it, and we would develop those policies around that. In other words, of how much money to put in, or how we would do that on an annual basis. If we have significant balance in the trust, we could use that to go against the unfunded accrual liability payments, the UAL payments in the highest years of the city's payoff schedule. So, you know, we get the way CalPERS works now is we get a schedule that goes out a number of years, and we're able to kind of chart where we are. We could use that to lower those peak payments. Or we could use it as we've done in the past and continue to do. We do make ADP payments. We do so annually. And we achieve a bit of savings from doing that. And this would allow us to continue that process, but just have it in a fund that accumulates more money there. Or we could pair it with, if it is advisable to move forward with the pension obligation bonds, we could pair it with those and have any initial savings directed to the trust, and use those savings as a stabilization to mitigate against the risk that could happen in the initial period of issuance. That is the riskiest, or at least one of the riskiest parts of that issuance, would be at the very beginning part. Next slide. So next steps. We would need to receive proposals in the past, when we looked at this, we had proposals from PARS and from PFM. And I think we were close to entering into a contract with PFM, but by that, it's too late to bring that up now. So we would just go out and reissue a request for proposals. We would go and evaluate those and return to this committee with not only a recommendation on going in that direction, but also a policy that would go around it for how to fund and doing that. And if we are moving forward with this, we would try to do it rather aggressively and target establishing the trust in the first part of the calendar year. Again, kind of coinciding that if it is advantageous to do or to issue POBs, kind of targeted along those lines as well. And I believe that's the end of this presentation, and I'm available for any questions should you have any.
All right, John or Tom, any questions?
I do. Thank you, Mayor. Tom, did you want to go first? Go ahead.
Mine's quick. I don't have any questions. I'm full speed ahead.
Yeah, I feel the same way. I'm very excited about the council's, hopefully the council's direction in obligating these funds. I mean, it will be an interesting conversation as far as the policy that we will come up with. But I think having a policy is much closer to fiscal responsibility than we have been in the past, as far as dedicated funds for our obligations, our unfunded obligations. I am curious about, and this is, I'm sure will get answered by the consultants, but the flexibility during the year as far as a review of our investment portfolio. How are we, can we act a little bit like, can we act a little bit more like the private sector when it comes to flexibility and where we decide those funds will be placed? Or do we have more restriction? I know we want to be conservative. I'm assuming that we would want to be conservative. I'm not looking for a high level of risk, but can we review on a quarterly or every 6 months, review our portfolio and make adjustments to our investments throughout the year, or are we stuck with one fund?
No. So these funds, because they are, Section 115 relates to the IRS code that governs it. So they are completely separate from our regular investment portfolio, and therefore we can be as aggressive or conservative as we want to be. We currently have these trusts for our stipend funds for the different groups that have a retiree medical stipend. So we have those. They do meet quarterly. They and review investment strategy. Some of them are a little bit more aggressive than others. It just depends on how that particular unit wants to invest those funds. So it literally is, we have the control over doing that. We would want to work with the consultant to kind of figure out exactly how we devise a committee to review that strategy going forward. I'm sure that those are things that we would, those are the next steps down the road to kind of figure out not only how much money would go in on an annual basis to fund it, but then, how we decide on strategy and the other things that go along with that. So we would use some help in guiding us in that way to be able to help guide you.
I appreciate that. And so conceivably, we could have 50% in a certain risk category, 25% in a certain risk category, and another 25% in a. So we do have that kind of flexibility to create a model that would best serve us, at least in hopes that it would best serve us. And thanks for that clarification. It's an important piece, and probably some of some of the more technical discussions that we'll be having.
Yeah, now I don't have any questions on this. It's something that we were moving in the direction, I think, of doing before the fire, and then that derailed a lot of our efforts, particularly because we didn't have any types of funding. So I appreciate you keeping up on it and bringing this back to us. I'll see if there are any questions from the public. I'm not seeing any hands. Madam Host, did we have any emails?
No emails were received.
Okay, I'll bring it back. I'm going to give the thumbs up on my end. Let's go ahead and keep this train rolling. And I see 2 thumbs up from John and Tom as well.
All right.
Great, thank you so much, Alan. Next item on the agenda is discussion about agenda for the next meeting. Mr. City Manager, did you have anything in mind for the next meeting?
I think we were hoping to bring back the financial policies piece that Alan mentioned earlier. And I think year-end closing for fiscal year 2020-21.
So in that next meeting would be on November 18th. So 2 weeks. A lot of work to do.
Yeah, I don't feel the need to add anything else to your plate for that meeting, Alan. It sounds like it'll be time well spent. John or Tom, anything to add?
Does that give you enough time? Do you to
Yes,
get it?
we're at the very least, we would have very good frameworks on where we're going. Some of these things, again, we had already started. So we're kind of re-energizing going in this. I don't want to lose momentum on them. So I just want to keep going.
Great, thank you.
You know, I have nothing to add. I just really want to send my appreciation for Alan, you and your team, because I know there's been a lot of changes in your department, but the product that you continue to present to us has been outstanding. So I know you've been the voice of your department. I really appreciate it. I know there's a lot of folks behind the scenes, and I really appreciate all their work and all their efforts, because it's very professional, and I really appreciate the efforts.
Thank you.
Okay, I've got nothing else for this meeting. Tom, John, Jeff, anything else on your ends?
Just thanks. Great job.
Yeah, good job, Alan. Thank you to the team, and we will go ahead and adjourn.